Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Tuesday, November 22nd, 2022. Another big down day in Tesla. We did close below the daily channel bottom at 170.11. We also closed below the intermediate channel structure at 178.51. So yes, sell signal, follow through selling, likely to continue playing out as we move into Q1. But I will say, especially if you went short on Monday's close, we do need another day. It was so close to 170.11 that it deserves another day for follow-through selling. In fact, you can look at this weekly chart. This is a high from, I believe it was September of 20. That held for several months at 167.49, and we came very close to testing it. This is, and we're also merely below the 170.11 formation by a narrow margin. We're outside the 1% zone, so it is a valid sell signal. I'm not trying to discount it. I'm just saying that in terms of being an aggressive short seller right now, I think liquidating a long position, certainly. Being an aggressive short seller, buying, 130 out of the money puts, for instance, which I'll show in a moment, or even lower. I think it could play out another day or two to see how the next few days play out. And I'll get to that actually here as we move into, let's take a look at this chart actually. This is really the upside. So let's say that we push or open today back above that 170.11 formation. 176.77, I mention it here, buy signal with a settlement above. Now I'm continuing the 170.11 to 178.51 region. This is still the big area. 172.94 is a long-term Fibonacci. We close below all of them. But if we today, Tuesday, settle back above 176.77, especially if we break yesterday, Monday's low of 167.54 by just a bit, 163.60 is, by the way, just a trend line off these lows here. I don't have it labeled. It is able to contain intraday selling. And let's say we tag that trend line and then close not only above 170.11, but also above 176.77. That actually reverses momentum aggressively into later week. So if you're short the market, let's say, I wouldn't recommend staying short through the rest of the week if we close today above 176.77, because we could have a vicious short cover rally. And I think that would be the extent of it. I think we could call it a short cover rally that for the following 3 to 5 days should then yield 194.83. This channel top 2 stars, able to contain buying on a 2 to 3 day basis. We could fall off from there if we close above 194.83. Not going to happen today, but if by the end of the week we do, then over the following 2 to 3 to 5 days, 214.86, which is able to contain buying at least on a weekly basis, possibly into later December, and we could fall back into the 170s or lower from there following a test of 214.86. It is this simple channel structure that, if settled above, would tell me we have a good low for the year, and we should make notable gains then into later December. So in terms of those of you who are 2 to 3 week position traders, there are 2 trades here that you could consider. A settlement back above 176.77 may well yield 214.86 over the next couple of weeks. Or you could just let it play out and see how we treat the 214.86 channel top. Let's say that you're not positioned at all, and if we close above 214.86, you can go long through the rest of the year. But I don't want to get too far ahead of myself in terms of upside. Right now, the emphasis is obviously decidedly downside. And here's the weekly chart here. These formations, 170.11, 178.22 on the weekly chart, we closed just below them. And 163.60 in reach today. If we break 163.60, we may well reach 153.04 today on an intraday basis. I do map out some of the steeply descending channel bottoms here. 144.21, 132.44. They're dropping at such a steep pace that they will eventually, sooner than later, actually become irrelevant. What I'm really looking at as far as our next target, and I think you know this if you've been watching the daily Tesla report now for the last few weeks, is this band of channel support presently between 118.78 and 130.49. And assuming the market continues easing south following yesterday's sell signal below the 170.11 formation, this area, 118.78 to 130.49, becomes, I think you could call it a 3 to 5 week target right now. It's just that, as I say, the earliest stages of a meaningful long-term sell or buy signal is the most susceptible to rejection. And so it wouldn't surprise me in the least, and I'm not expecting, I'm just saying it wouldn't surprise me if we closed not only back above 170.11, but quite possibly the 176.77 high from yesterday. And so just so you know, a WickedStocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. If we put out a new low today and close above yesterday's high, that itself is a key reversal low, a sign of oversold trade, the market then likely to recover through the rest of the week. So we're at the very earliest stages of a long-term sell signal. If we continue south today and close lower again on the day, then yes, I am convinced that this is a longer-term sell signal worth acting on. 153.04, by the way, there are only so many charts I can draw. If you were to draw a simple trend line off of this, looks like March 22 low against this May low, just a simple trend line off these lows comes down about here, actually is a 153.04. I'll probably include that in tomorrow's Tesla. And that is a level that can contain daily, possibly selling pressures through the rest of the week. If we break 163.60 today, we might actually test 153.04 on an intraday basis. That would be a meaningful sell-off today, and that would be in line with what could play out following Monday's settlement below this significant zone of long-term support. I just wanted to remind you that anticipating 3 to 5 weeks from now, the 118.78 to 130.49 region, and I'll put it out there again. Yes, this is a long-term head and shoulders formation. Yes, this is a 5/8 Fibonacci support level. And yes, this is a church steeple rally. We tend to give those all the way back to where they started, March 2020 COVID low. I think this is 28.36 a share. Are we going to fall at 28.36 a share? I don't know if we are or not, but what played out on Monday's close points to that possibility. I'm confident, assuming we close lower today and continue south into later week following Monday's sell signal, that this 118.78 to 130.49 region is likely by the end of December. We could bounce here for a month or so. But honestly, as time goes by, this thing actually converges over the next, I think, 6 months or so as we move into April with the low anyway. So keep that in mind. Anyway, I think I've said enough. Have I said enough? Let me cover the upside just a little bit more here today. I just want to mention that if we do push through 176.77, yes, we've got 178.51, but I think after the close below, just prompting you for the short cover rally above 176.77, 184.18 in reach today. And if we close then above 176.77, 194.83 likely within 2 to 3 days. And then over the next couple of weeks, 214.86 in reach. So the last thing I'll say is right now, this bar on the weekly chart, it looks like we've closed below it, but that's Monday's settlement. We haven't closed the week below it, and you can see by how minor the violation is thus far that if we could look back on this, say on Friday, and see that it was just a blip below this long-term support region. I guess that's the point I'm trying to make, that the violation of this significant zone of support in the 170s is insignificant at this point in time, and we can quite easily bounce out of here. It wouldn't surprise me in the least. And if we close once again today above 176.77, we have a short cover rally to 194.83 within several days, 214.86 within a couple of weeks. But continued daily settlements below 170.11. There's really nothing to do but play the short side, whether that's through the rest of the week down to 153.04, for the next 3 to 5 weeks down to 132.44, or the next 3 to 5 months, ouch, all the way back to A. And that is all I've got to say for Tuesday's Daily Tesla Report. I'll be back tomorrow with Wednesdays. Please click like if you haven't already. I appreciate it each and every time. It helps us out a great deal. Subscribe to Wicked Stocks YouTube channel. You'll get notified each and every time new content has been uploaded for your viewing. That's the Daily Apple and Daily Tesla Report each and every trading day. You have a great evening.